Good evening. In the next 15 to 25 minutes, we are going to dissect the entire market picture from the latest fully closed Indian session, 17th December 2025, break down the options landscape, decode psychology and drivers, and frame what matters most for tomorrow's opening direction. Here's the opening frame. Nifty closed bearish below 25,850 after 3 consecutive sessions of decline. BankNifty also closed under pressure, reflecting weakness in broader financials. So the first 15 minutes tomorrow, Thursday 18th December, will decide near-term sentiment. Bullish triggers are break and hold above today's high range levels, while bearish triggers are rejections at key supply zones that keep sellers in control. This isn't opinion, it's derived from closed session price action and confirmed trends. Across global markets yesterday and today, the story was one of mixed signals and caution. US equities ended mixed after jobs data created uncertainty around future Fed policy. Asian markets were subdued, reflecting a risk-off bias into the late Asia session. Forex markets saw the Indian rupee initially weaken and then rebound due to RBI intervention. Why this matters? India is deeply correlated to global flows. When US data sows doubt on rate cuts or economic growth, flows into M equities can stall or reverse. In today's close, persistent foreign outflows weigh heavily on Indian indices. Currency action matters too. A weaker rupee increases hedging costs and can trigger defensive positioning in exporters and financials. Dominant RBI intervention to stabilize the currency underscores the sensitivity of Indian assets to FX dynamics. So, the global backdrop remains one where macro risk dominates micro strength, meaning Indian markets may open tilted toward caution. Nifty 50 closed at -25,818.55, down -0.16%. Decline was broad, confirming distribution on the day. A lower close after earlier range tests shows sellers maintaining initiative. BankNifty closed lower around 58,926 to 58,930 area, sliding more than the benchmark, indicating financials lagging. Breadth and participation. Decliners outnumbered advancers at a large margin, especially in mid and small caps. NSE turnover slid to a multi-year low, signaling cautious participation. What this tells us, market sentiment remains tentative, bulls are not yet establishing aggressive control, and distribution pressure from weaker segments could persist. Today's notable sector action was as follows. Positive sectors. PSU banks showed relative strength, a handful of state lenders ended higher. Select commodity and metal names outperformed on specific catalysts, example zinc stocks hitting new highs. Lagging sectors. Consumer durables, healthcare and media saw relative weakness. Private banks underperformed overall, reflecting risk of rotation. Sector inference, defensive and value-oriented pockets held up better, while cyclicals retreated, characteristic of a late cycle shift when macro cues turn uncertain. Based on the closed session. Top gainers. Shriram Finance, a credit-centric name, closed higher. State Bank of India ended with modest gains. Top losers. Hero Motocorp and Apollo Hospitals were among top drags. Financial services names like ICICI Bank also lagged. This mix suggests that stock-specific catalysts are currently driving performance more than broad market leadership. Institutions continue to tilt bearish. Recent FII activity showed net selling pressure, particularly in the cash segment. DII flows have attempted modest catches but have not offset foreign selling significantly. Technical selling from foreign participants has been a consistent theme, which pressures benchmarks and weighs on sentiment. Nifty trend, downside pressure intact, lower highs and lower lows confirmed. Support, near session lows ~25,750 25,800. Resistance, daily high and key supply zone nearer 25,950 to 26,000. Chart psychology says sellers beat buyers at each range test. Without an immediate reclaim above resistance, downside remains favored. BankNifty. Mirror behavior to Nifty but amplified volatility. key pivot zones need reclaiming before bulls can reassert. Price structure suggests cautious participants and no definitive breakout yet. Call writers are defending lower ceilings, capping upside. Put writers are getting challenged around current lows, with OI indicating defensive strikes crowding the downside. This battle language implies that until put side absorbs selling and call side yields supply, range contraction or downside bias persists. Similar dynamics emerge. Call OI congestion near prior swing highs suggests supply wall resistance above current levels. Put side defensive hedges may trigger accelerated downside if broken cleanly. Thus, options positioning warns of heightened gamma and sensitivity around intermediate support. Psychology remains tilted toward risk reduction. Traders are sensitive to macro uncertainties, global jobs data, currency volatility. Low turnover signals reluctance to commit capital into directional bets. RBI intervention in FX markets injected temporary relief but underlines caution. In this frame, the market reinforces a wait-and-watch mindset, no decisive bullish confidence yet. Key news themes from today and recent sessions. Third straight session loss for Nifty, reflecting persistent foreign capital pressure. RBI intervention stabilized rupee after sharp declines. Stocks like Hindustan Zinc saw strength on sectoral catalysts. Weakness observed in consumer and private bank spaces. Global cues remain a persistent driver, especially US data shaping risk sentiment. Now let's frame Thursday, 18th December 2025, strictly from today's fully closed structure and confirmed positioning. The market is entering tomorrow with compressed confidence. Price has corrected, participation is thin, and options positioning suggests defensive behavior rather than aggressive conviction. For Nifty, the immediate takeaway is this. If the index fails to reclaim today's VWAP zone and early resistance band, sellers retain short-term control. That does not automatically mean a trend breakdown, it means continuation of balance to negative bias. On the flip side, if the opening sustains above the early resistance cluster and holds for the first 15 minutes, short covering pressure can emerge quickly because a large part of the market is already positioned cautiously. For BankNifty, the tone is even more sensitive. Financials have underperformed relative to Nifty, which means any further weakness here can exaggerate index moves. Tomorrow's behavior in heavyweight private banks will likely dictate whether BankNifty drags the broader market or stabilizes it. The most important insight for tomorrow is not prediction, it's confirmation. The first 15 minutes will clearly tell whether sellers are still absorbing bids or buyers are finally willing to defend value zones. Until that confirmation appears, expect sharp reactions near key levels, not smooth trending moves. This is not a trading list. This is a learning-based observation list to understand how institutions behave around key areas. Large-cap private banks. Watch how price behaves near intraday supply zones. If these stocks fail to participate even when Nifty attempts recovery, it signals structural weakness in financials. PSU banks. Relative strength here is notable. Observe whether strength continues on a weak index day. That often reveals sectoral rotation rather than broad risk appetite. High-weight index stocks, IT energy. These stocks often act as buffers. Flat behavior here while the index moves sharply usually means derivative-driven index action rather than cash-led conviction. The goal tomorrow is observation of behavior, not action. Most traders believe high-volume days are important. In reality, low-volume days tell you more about intent. When volume drops, institutions stop committing aggressively. Option writers gain temporary control. Price becomes reactionary, not directional. Low-volume sessions often act as setup days, they compress price, build option inventory, and prepare the ground for expansion. That's why days like today matter. They tell you who is waiting. Tomorrow is not about prediction, it's about recognizing when waiting ends. Let's bring everything together. Today's market closed with pressure, not panic. Global cues are mixed. Foreign flows remain cautious. Options positioning reflects defense, not aggression. For Thursday, 18th December, the message is simple. The first 15 minutes decide direction. Nifty and BankNifty must prove strength, not promise it. Inside the range, option buyers bleed. Outside the range, moves turn fast and emotional. Do not predict. Do not anticipate. Let the market confirm. If you found value in this breakdown, stay connected. Markets reward preparation, not prediction. That's the complete market picture.